Welcome to today's Silver Log, and the date is August the 1st, 2011. And before we get started within today's silver analysis, there are a few things that I want to go over first. What is the hypothetical question that has been asked on many different occasions? What would you do if you were the President of the United States of America? And I think when you answer this question, you can get the same answer for very similar type of questions. What would you do if you were a drive-through clerk at Wendy's or McDonald's or Tim Hortons? What would you do if you were a janitor for an investment company or maybe even a baseball team? And I think the answer is pretty simple. You do what you gotta do, you do what you're told, and well, if you don't, you can just watch what happened with JFK. So I guess I got no choice but to do a hypothetical statement on this. What would you do if you were president? And you look at the situation right now within the debt ceiling, debt clock, and all that kind of stuff, and they're having these votes, like 90 some odd votes, with a population of well over 240 million American adults. It obviously shows we don't get the vote for big issues like this, and I don't think that's fair. Therefore, if I was hypothetically able to do what I would want to do, I think it would be a very logical assumption to maybe mail out pamphlets to every person in the United States, 3 or 4 pages, explaining as clear as possible how fiat money is created, how the system within the Federal Reserve and the bond system works, how debt is 100% guaranteed within this system, and then from that point on, ask them, do your vote at this one particular web page. What would you want to do? Well, I would be definitely persuading people most likely into not wanting to raise the debt ceiling. And I say that because the power of persuasion is extremely big. And if you take a look at what's been done within the powers that be within persuasion, you would be very surprised. Now let's move on and move on to something that is totally not silver related, but this is when the sun rises in Toronto, Ontario, Canada. This is a 2-year chart, and well, in the spring, you can see the sun happens to get earlier and earlier, and then the summer solstice comes in, and we leave the peak period, and you have this major crash move. Well, that's adjusting the clocks because, quite frankly, 8 o'clock in the morning, that's kind of late for the sun to be rising. Yes, it means it's an hour earlier that the sun goes down, but that's the manipulation that's been done. And well, we can see that the same thing happens in here. They increase the time again. So we go from 6:30 to 7:30, which means it gets darker later on, but a lot of it's manipulated. One thing you can't manipulate are the amount of hours in a day, but this is something that can be done. As far as Reykjavik, I can't even pronounce it. It's a place in Iceland, up closer towards the North Pole. On the summer solstice, the sun rises at around 2:20 in the morning, their time. And then on the winter solstice, it rises at 11:20 something in the morning, and they do nothing as far as changing their times at all. Let's now move forward towards the Dow Jones priced in gold. A lot of people have heard Peter Schiff talking about how gold will match up with the Dow at 1 to 1 at some level within the future. Doesn't want to state what the variables will be, maybe 4,000, 4,000, maybe 25,000, 25,000. That's not up for debate as far as he's concerned, but he's stating it's going down to 1. Now, what does the chart tell us? Let's look at the higher highs and higher lows. Well, actually, lower highs and lower lows. There's this low. It's pretty much making that pattern of lower lows. There's the lower highs. I guess if it finds a way to bottom here and goes higher, it would find a higher low. But when you're within the trend like this, that becomes the underdog or what is not favored to happen. But we see the situation in 2009 where the market bottomed in here, and well, since then it's consolidated sideways, or a term called as a bear flag. And a bear flag is when you're going lower, and then it goes sideways for a little bit, and would ultimately end up going straight lower, sort of like in here, maybe a little bit in towards there. Now, as far as silver, same sort of deal, and it's really in a major downtrend to say the least. If we draw some trends, there's not much hope right now for the stock market priced in silver. Now, when something's down a lot, then at some point it would have to bottom. But what would be the most previous low? This only goes back to 1995. In 1980, how much was the price of silver? Well, it got up to 50. And when it was at 50, the Dow was in or around 800, which would translate into well under 20 to 1. And we're at 300? I guess it has a potential to go down either further just and only strictly by using historical data. Moving on towards the silver data, we'll start within the monthly time frame. A new month has just begun, so therefore the 18 period average of highs is set at 35 and a quarter, and the upper band is still up around the $55 level. It's already had a single bounce in the month of July from this level. It can obviously have many before it breaks free. We can see in here it has quite a few before finally breaking away from this level. That obviously isn't always the case, but when we are seeing the market open up as we are, you really want to move more on a shorter term time frame to see, does it really look like there's much of a technical shot at hitting this level? Within the weekly chart, to go down to 35, that would take us down towards the 18 period average of lows. It's now in its third week of hugging towards the upper part of this band. Yeah, of course it can manage to go lower, and this will be more explained when we take a look at this on the daily chart. What we're seeing here is this band is reducing and this band is rising. And that's because of volatility issues. When the volatility gets lighter, then these are designed to move closer within each other. And when the volatility gets large, like in here, then the bands would be separating from each other. And for the longest part, the market traded within this range of about 32 to 38. Therefore, until that 38 level, which is roughly at the 18 period average of closes, until that gets taken out, I will not even be considering any bearish movements as of yet. But there is one thing to be worrisome within the daily chart, and that is the fact that the market has not tested this band, which really is even above the 41.91 level, closer to 42.20. It's around the same level. However, it has not managed to make it up towards that, and it still can. I'm saying it's a troublesome because when you can confirm that you can get by a Fibonacci level, which is this one in here, then that means that you've confirmed that you're at least going to test that level. And that hasn't happened, at least as of yet. This is now 9, 10. This is the 13th day since it has managed to break above what really is this level in here. These lines are going to be moving all week. They are going to be moving higher and higher throughout the week because the levels from the 67-day high will be reducing. Within this 18 period average, it is now finding an area of support at this level. If it continues to stay within this, then it's going to go to neutral, and then if it breaks down, it would move into that of a bearish state. I'd be looking on a breakout above this line. Right now, the 18 period average of highs is set at $40.21, and the lows is at 38.86. The big one again is a hair above that 38 level, roughly around $38.10. The quarter day chart or the 6-hour chart has been having a test of this 5-day moving average that has not completed ever since the 19th of June when it managed to come up towards this 5-day moving average. This market is pretty much neutral now, trying to find direction because it's went below this level, tried to turn this into a bear market? No. Okay, so it's going higher. We're going to go bullish? Okay, no. Okay, now it's lower. We're going to go bearish? And I don't know. And right now it's showing that sign where it just wants to break away and make that big move to the downside, sort of like it was showing the big move to the upside in here at the exact same kind of a rate. The Fibonacci level in here, this level is 38.78, which was really the last significant support line. The upper band, it's up at 42. There's really not much to state about this other than market is in a neutral state until I can see otherwise. And what I need to see is I need on an upside, for example, I need to see it break above this level and have a significant move higher or find support and break higher. This is where it found support without breaking higher. And the same thing is true for the downside, either a big break lower or find resistance, sort of like in here, and then break lower. Nothing of that has happened as of yet. The volatility within silver is still pretty much non-existent. Nothing as of yet is picking up too much despite the debt ceiling talks. However, it's more of a waiting game. These previous levels at some point, not only do I expect to be tested, but on multiple occasions and most likely a break above the previous high of about 15% over a 6-hour period. Again, this is only what I think will happen. Just because I think it to be the case doesn't mean it will. Finally, we'll take a look at this longer term look on the quarter day chart and take a look again at this trend line that I've been focusing on, which connected these two peak highs that became resistance. It's obviously broke below. Therefore, the level that I'll be looking at still has a little bit of either downside room to get to this level or time to consolidate to get towards support line. Thank you for watching the Monday edition of the Silver Log and have yourself a great day. Bye bye.